Algorithmic Strategy Update, August 2026. This is the August 2026 strategy update for Cosmic Algorithm Limited and Backseat Trader. We begin with the long-term performance picture. The updated dashboard continues to show a strong record since live trading began in October 2022. Annual return is around 26.5%. Cumulative growth is approximately 101.5%. Maximum drawdown is close to -11%. The headline Sharpe Ratio is around 4.6, and approximately 62% of months have been positive. The cumulative gain comparison still shows the strategy finishing materially ahead of the reconstructed Nasdaq 100 benchmark, although the benchmark followed a smoother path for much of the period. The main story this month is the transition from July's sharp drawdown into August's stabilisation. July produced a portfolio decline of roughly 16% after a powerful advance through May and June. The reversal affected many of the same Nasdaq leadership themes at the same time, including artificial intelligence, semiconductors, memory, chip equipment, cybersecurity and infrastructure software. By the 27th of August, the portfolio had returned to a gain of a little over 1% for the month. That does not undo July's decline, but it is an important change in behavior. The drawdown has stopped accelerating, and the portfolio is now presenting more as stabilization than as a fresh leg lower. The risk picture also remains important. Historically, the strategy has accepted deeper interim declines than the benchmark in exchange for stronger final compounding. That is why drawdown should always be considered alongside return rather than in isolation. The rolling Sharpe profile is also useful. Recent risk-adjusted performance has improved relative to earlier periods, while the reconstructed benchmark has weakened sharply near the end of the chart. The headline Sharpe ratio of approximately 4.6 is calculated differently from the rolling series, so the two should not be treated as directly identical. Turning to the Nasdaq 100 market backdrop, August has remained volatile but broadly constructive for technology. Nvidia's latest results and strong forward revenue outlook reinforced confidence that demand for artificial intelligence infrastructure remains durable. That helped support semiconductor shares and the broader Nasdaq. CrowdStrike and Salesforce also benefited from stronger forecasts, providing additional support to the software and artificial intelligence complex. At the same time, hotter inflation data, elevated long-dated bond yields and geopolitical uncertainty have continued to pressure valuation-sensitive growth shares. The market is therefore becoming more selective. Strong earnings delivery is still being rewarded, while crowded or expensive positions can be punished much more quickly when expectations are not met. Looking ahead, the medium-term opportunity set remains attractive if artificial intelligence capital expenditure, cloud demand, cybersecurity spending and data center investment continue to translate into revenue and earnings growth. Nvidia's latest guidance supports that case. However, the path ahead is unlikely to be smooth. Three factors are likely to matter most over the coming months. First, interest rate expectations, particularly following Jackson Hole and any change in the market's view of long-term yields. Second, market breadth. A healthier Nasdaq advance would ideally broaden beyond a narrow group of megacap and semiconductor leaders. Third, valuation discipline. Elevated prices will increasingly need to be justified by continued profit growth and strong forward guidance. For the strategy itself, the process remains unchanged. The model ranks candidates objectively, rotates monthly and allows persistent relative strength to determine exposure. August stabilization is encouraging, but it is not treated as proof that every July leader has recovered. Each holding must continue to survive the multi-horizon ranking process. If leadership broadens, the portfolio should rotate with it. If artificial intelligence and semiconductor leadership remains dominant on a persistent relative strength basis, some concentration can legitimately remain. The overall assessment is therefore straightforward. July was a genuine stress test. August, so far, has been a stabilization phase. Long-term compounded performance remains strong, but the recent drawdown is a reminder that concentration across correlated Nasdaq leadership themes can amplify reversals. The outlook remains constructive, supported by artificial intelligence demand and continued earnings delivery, but disciplined execution and risk control remain essential. Current example holdings include Datadog, Cisco Systems, Fortinet, CrowdStrike and Palo Alto Networks. These are illustrative holdings only and may change as the ranking process updates. Past performance is not indicative of future results. Investing involves risk, including the possible loss of capital.